Are you paying hundreds or even thousands of dollars in property taxes more than you did last year? Well, if you are, you're not alone. People all across Georgia are raising hell because the property assessments are way over what they were last year, and they're not happy about it. Today, I'm going to explain what I've learned about the new tax assessment platform that most of Georgia's using and how they calculate your taxes. Hopefully, this will give you the knowledge that you need to properly appeal your tax values. Hi, guys, I'm Chris, your real estate problem solver, and I'm here to help you in any way that I can make the best decisions pertaining to real estate for you and your family, whether it's buying, selling, or in this case, fighting your tax values. So let's get started. But just before we get started, remember, if you have any questions about real estate in the Middle Georgia area, make sure to reach out to me or give me a call at the number below, and we'll set up an appointment to get all your questions answered. And also, if you have anything to contribute to this video about tax assessments or what you might have, if you have any extra information to contribute to the group, make sure to make a comment below and let the rest of us know about it so everybody can make sure that they get their taxes appealed properly and efficiently. All right, to start off with, the new tax assessment platform that most of the tax assessors' offices are using in the state of Georgia is a new company. Well, I don't know how new the company is, but the platform is called WinGap. Now, this platform is pretty much being used in all but about 5 or 6 counties up in the North Georgia area. All the rest of us are using this new WinGap program. Now, the way that it works, apparently from what the tax assessors that I talked to explained, is it already has a series of parts and pieces of different aspects of a house that have certain values. So it's already been pre-programmed with roof values, shingle values, metal roof, granite countertops, LVP flooring, carpet, Formica, hardy board siding. All these different parts of the house have already been calculated into the program to have certain values. And based on what the tax assessor comes out and observes on your property, they go in and kind of verify what they think the property has. Of course, they're going to, for me, when we built our personal house, they sent out a letter saying, congratulations on your new house. What all did you put in it? So, of course, I threw it away. I wouldn't answer them. I pretty much walked up to the office and said, that's none of your business. You assess it from the road, you assess it from outside, and that's all you get. And of course, they didn't like that answer, but what are they going to do? So, they will try to evaluate the property for, as accurately as possible based on what information they do have. And since they didn't have any information about the property from the inside, they went with, average standard information. So, but the WinGap program, the way she explained it, is it has all this information pre-programmed, and then based on what the tax assessor verifies, they come in and they adjust the calculated assessment accordingly based on what they went out and noticed for themselves. Now, almost all property values are going to be assessed based on a couple different aspects. First of all is going to be the land. The land is evaluated separately by itself. And then you've got the improvements, which would be the house itself. And then also they may have separated a third category for additional improvements or outbuildings, like an a detached garage, or a well house, or a utility building, or a shed, or anything like that that's away from the primary structure. Of course, they're going to try to get their taxes off of any piece of property, any building or improvement that's anywhere on the property. Now, there are rules about certain buildings that if you can pick them up and move them, then they don't count as a taxable structure. So make sure to check with your local county and find out what those rules are, because you may be able to argue they can't tax you on this or that because I can pick it up and move it, or it doesn't have a permanent foundation, or it doesn't occupy continuous living space. So make sure you find out what the rules are for your particular county. So let's get into a particular example that I am currently appealing right now and show you what I'm doing and what I found out, so you can use these to weaponize your appeal. Alright, so in this example, we're going to use Houston County Q Public. Now, most counties in the state of Georgia have Q Public as their tax assessor's website. So Houston County is in our area, so that's the one that I'm bringing up. But the example that I'm going to use is one that I'm arguing in Pulaski County. So here, the example that I've got is 62 Boyer. It's in Pulaski County. And you bring it up and you've got a button here that can bring up the tax assessment that got sent to you in your email, or it's sent to you in your post mail. Now, when you get this in the mail, it's going to be in the top right corner when you get it and when you should be able to file an appeal on or before date. And then, of course, the part that you're arguing is, in this example, last year this property was assessed at $61,900, and this year all of a sudden it jumps up to $155,000. Now that's a 120% jump in the value on this property alone. So of course I'm going to appeal that. So once we've got this in the mail and we're ready to file, it's going to give instructions here in the main body of where to go to file. Now, usually there was a button at the bottom of the tax assessment for the property to file an appeal on that particular property, but I prefer to take it directly to the tax assessor's office and look them in the eye. Number one, because you can't always this button that's not here anymore requires you to fill out comps from the website, so it doesn't take into account a lot of things that you may have offline or information offline to be able to add to it. So I like to make my own package and take it to the tax assessor's office in person. So once we file an appeal, and the way we file an appeal is we get there, you can go onto Google and you can type in this top corner right here, PT 311A. Now that's going to bring up your appeal form, and you can fill this out. It's all filled out automatically for 2024 because that's the year that this is. And then in the top, of course, you put in your contact information. In the middle, you specify what kind of property you are appealing, whether it's personal property, motor vehicle, or real property, which is what we're doing here. And then you get your tax assessment sheet that we talked about a second ago is going to have your property ID number, if it's got an account number, and then also the if there's a description, motor vehicle, personal property, trailer, or in this case, put the address because we're talking about real property. Now, one thing that I did learn from from another tax assessor and other people who are filing is when you are filing on a personal property or a real property, click value and uniformity, because if in the middle of the appeal they ask for more documentation or you have to switch gears on what your argument is, you could be in a situation where you're changing from how much the property is really worth to how different your assessment is from your neighbors. And if you switch gears and switch strategies from one to the other and you don't have this checked, then they can argue, well, we're not talking about that. You can't admit that because you didn't ask for that. So I was told go ahead and put a check mark by value and uniformity. Now with this property, like I said, the original value was way lower than what they're assessing it to be now. So the argument that I'm making is that our county went up in value by 6 to 10%, and they jump me up 120%. So that's going to be the argument that I'm going to start with here. And then in this lower part, you're going to show your property class, which in this case is residential. And then if you have a real estate agent or an appraiser do some kind of an evaluation, or a contractor that does an affidavit, then you would put their information down here at the bottom. All right, so once we've got this filed and we've got our documentation submitted, then it's going to go to the assessor and they're going to evaluate it. Now let's look at the evaluation. Now this is just a printout that I got from my tax assessor when I went up to drop off my my appeal paperwork, and of course it's got the same thing that was in Q Public, is the property information, legal description, property improvement values, and this is 2024. So these over here on the right is the value that they're showing that it is this year, and then last year was half of that or less than half of that, and the year before. So this is not the part that I wanted to show you. The part that I found interesting is on the page 2. Now, like I said, with WinGap's platform, the way she explained it to me is if you look here in this 3 and 4 columns on the printout, what you have here is the year built. On this house is 1973. Well, they evaluate the property. They go out and they do a visual evaluation, and of course, well, most people see them come by and do a drive-by and look at it from the road. But out in the country where they can't quite see the house, they will sometimes try to slide their butts up onto the property, and they chance getting into an altercation with somebody like me. But the year is 1973. That's when the house was built. Now, from 1973 to 2024, they evaluate a property to have deteriorated a certain amount each and every year. And the value of the property goes down each and every year accordingly. Now, if they go out to the house and they see that there's been any upgrades, a metal roof, re-landscaped or regraded, new driveway, if they think that you remodeled the inside of the house, they put in granite countertops or LVP flooring, they did a repaint or a remodel, then they will, in this next one, effective year built, they will change the effective year built. Now what this says is this house looks like it's in the condition of a property that was built in 2007. Now, if they had left this alone and the property was built in 1973 and we didn't do any upgrades, we didn't do any changes, we didn't do anything to it, from 1973 till now would probably be somewhere in the neighborhood of, well, let me back up. Let me explain what I'm getting ready to say. The 2007 effective build year means that it's deteriorated from brand new in 2007 to now. Well, with that calculation, if you look on the column 4 in the top of the physical depreciation, or I guess that's what that abbreviation is, physical depreciation, there is 83% of the house left. That means it's deteriorated from 2007 till now. It's deteriorated 17%. It's still 83% good, or 83% like new, I guess you would say. So if they had done nothing, if they had not changed anything, and the house was in the original condition of 1973, then this 83 would be more like a 25 or a 15. So it would have deteriorated over all that time. And this percentage would be a whole lot smaller, a whole lot lower. Well, this physical depreciation and the effective year built are kind of tied into each other. If you change one, you're going to change the other. Effectively, this is where the tax assessor's subjective opinion is taking a toll on the appraisal or on the assessment. So if the assessor is having a bad day and they come out to the house and they think, you know what, this house looks like junk, well, they could subjectively change this value to a lower amount, meaning that your house isn't worth as much. That's kind of good for you. But if they come out real perky, real optimistic, and they decide, you know what, that looks like a brand new roof, that looks like a brand new landscaping, this house is immaculate, it's got to be immaculate inside, I'm going to take this 1973 house and I think it looks like it's in the condition that it would have been brand new in 2010 or 2015. Then you're bringing up the value subjectively, and you're going to pay your taxes according to what they feel like the condition of the house is in. And this is where you're going to have your argument. So unfortunately, with this being said, now you would have to take away value from your property by arguing that you don't have granite countertops, you have Formica, you don't have LVP flooring, you've got a dirt floor. You don't have double pane glass windows, you have plastic film over the window, on the windows, and it's old single pane with the lead weight counterweights, and it's been painted over, and the house is only worth $10. So unfortunately, this is going to be a case of your opinion versus the opinion of the assessors. Now, a contractor may be able to help with this if you've had anything done to the property, or if you haven't done anything to the property, then a contractor could come in and evaluate it themselves, or even have a realtor come in and do a BPO. Now, this is a double-edged sword. They could come back and say that the property is worth more than the assessed value. So it's kind of whether or not you want to take that chance. Now, the other argument that you can have, and I mentioned this before, was you've got the improvement of the property, which is the house or the garage or the well house, but you've also got the land. Now, this is where you can end up kind of hurting yourself a little more than helping. If you find out that the value of your land is valued higher than your neighbor's, and they have about the same size lot, then you can argue uniformity. Now, this is where they told you to check uniformity and value, because if you can't get them to budge on the condition of the house, then the other part that you may have noticed was unfair is the land, and the uniformity can be an argument to drop the value of the land itself. Now, if your neighbor's land value is, say, $20,000 and yours is $30,000, and you let that go as your argument, well, one way is they can drop yours down to $20,000 with everybody else, or they can say, oops, my bad, everybody's supposed to be $30,000. And then they end up bringing up the value of everybody else, and make a few people mad with that one. So I'll let you evaluate whether or not you want to walk that tightrope or not. Now, the final points that you can make with your appeal is going to be just good old-fashioned comps. If you've got similar houses in your area that are same square footage, same lot size, 3-bed, 2-bath, or 4-bed, 2-bath, had the similar exteriors, similar features, then of course you can appeal on the grounds that you have comparable houses that have sold for less than what they're putting your appraised or your assessment at. So good old comps, the conditions of the house, and then of course uniformity of being same as everybody else, which kind of is two sides of the same coin with running comps. So I hope this information helps out. If you have any questions, make sure to reach out to me. I'm your real estate problem solver for Middle Georgia, and I'll talk to you on the next video.